In the equity market, it is said that the long-term trend is always up, and which is why the amount of time you remain invested affects the performance of your portfolio. Of course, longer being better. Money Control undertook an interesting study which is spread across a period of the last 2 decades to curate a list of equity diversified funds that have multiplied investors' lump sum money up to 66 times over 20 years. Well, must give the rider though that past performance is no indicator of future returns, but having said that, here goes our list. Let's start with the Nippon India Growth Fund, which was earlier known as the Reliance Growth Fund. Now, this scheme has been one of the biggest wealth creators in equity-oriented category. The scheme has been managed as a mid-cap oriented fund since its launch. Though it has put up an average show in recent years, it had once been a top-performing scheme when it was managed by Sunil Singhania, their former head of equities. So if you had invested a lump sum of 1 lakh 20 years ago, it would have multiplied about 66 times at a CAGR of nearly 23.3%. Next on our list is the SBI Magnum Global Fund, formerly known as Magnum Global Fund. The scheme's attributes changed to investing exclusively in MNC stocks during SEBI's recategorization exercise in mid-2008. So earlier, it used to be a diversified equity fund with specific focus on mid and small cap stocks. R. Srinivasan, who is now the CIO, has played a key role in the fund management of this scheme since 2009. So 1 lakh invested here 20 years back would have grown to about 52 lakhs today, a CAGR of nearly 22%. The Franklin India Prima Fund has been another strong performer and has been managed with a mid-cap heavy portfolio since its inception. R. Janaki Raman has been managing the scheme since 2008, and over here, a 1 lakh rupee lump sum investment made 2 decades ago would have yielded 47.4 lakh today, growing at a CAGR of 21.3%. Next is the SBI Contra Fund. Though it appears to look like a diversified fund, this scheme has been one of the few which follows the contrarian investment strategy. And well, it seems to have paid off too. Remember, this used to earlier be called the Magnum Contra, which invests in stocks which are contrarian in their appeal. And in the last 20 years, this fund has grown a 1 lakh rupee lump sum investment to 45.6 lakh today at a compounded annual growth rate of 21%. The HDFC Flexi Cap Fund, which is now the erstwhile HDFC Equity Fund, also finds a place in our list. This is a diversified equity fund which invests across stocks, irrespective of the market cap. Now, the money invested in this scheme has appreciated as much as 44 times in the last 20 years. In other words, your 1 lakh would have become 44 lakhs today. Also featuring on this list of best performers is the DSP Flexi Cap Fund, which was earlier known as a DSP BlackRock Equity Fund. At that time, it used to be a value-oriented scheme, but the attributes were changed and currently it follows a flexi cap approach. So if you had invested a lump sum of 1 lakh rupees here, it would have multiplied about 43 times at a CAGR of nearly 21%. Now, a few ELSS schemes have also done well for themselves. Amongst them, one is the SBI Long-Term Equity Fund, which was earlier known as SBI Magnum Tax Gain. This is, one such fund where the money invested 20 years ago would have grown 43 times. The other ELSS scheme which features in this category is the ICICI Prudential Long-Term Equity Fund, which is where an investment of 1 lakh rupees made 20 years ago would have grown to over 42 lakhs today, a CAGR of over 20.5%. Now, another fund to feature in our list is the SBI Large and Mid Cap Fund, previously called the SBI Magnum Multiplier. This has managed its portfolio with a combination of large, mid and small cap stocks. And this scheme would have grown your 1 lakh to almost 42 lakhs today. And the final contender to make it is the HDFC Top 100 Fund, which has been one of the flagship funds not just for this AMC, but also for the Indian mutual fund industry. Though the scheme has not been, one of those great performers in recent years, but its long-term performance is still quite noteworthy. The money invested in this scheme has appreciated as much as 40 times in the last 20 years. So I hope this goes to show that real wealth can be created using the mutual fund route, provided you stay the course and don't give in to impulses driven by the market volatility.